Okay, let's unpack this. You're trying to get a quick handle on what's really moving the crypto markets, yeah.
Hmm,
Cut through the noise. Well, you're in the right spot.
definitely.
We're doing a deep dive today into, well, the big news. The total crypto market cap pushing back over $3 trillion. dollars.
Exactly. That's the headline figure. We're digging into why, what factors got us back to that pretty significant milestone.
The highest since what, early March?
That's right, March 7th. So our mission here is really to understand the forces behind it, looking at some recent market analysis.
$3 trillion. dollars. It's definitely a headline grabber.
For sure.
And what really stood out to me was just how fast this happened. Apparently something like $500 billion flowed in just since April 9th.
Yeah, that's a key point. $500 billion.
That's not a slow buildup, is it? That feels like a pretty sudden shift.
It really does. It suggests more than just a gradual recovery. There's some serious capital moving.
What do you think is behind that kind of speed? Is it just confidence returning or something more specific?
Well, renewed confidence is definitely part of it. But, you wonder if maybe there's broader institutional interest kicking in beyond even the ETFs we keep hearing about.
Maybe reacting to other economic stuff or something crypto specific?
Could be a mix,
Hmm.
macro signals, maybe some under-the-radar developments within crypto itself. It's complex.
And leading the charge, no surprise, is Bitcoin, hitting over $93,700.
Yep, Bitcoin's definitely out front.
That's what caught my eye was this mention of altcoins getting some rare gains, minor price pumps. So it's not just Bitcoin this time.
That's a really interesting wrinkle, isn't it? While Bitcoin leads, seeing gains across the board, even if minor for some, suggests maybe a healthier, more diverse recovery.
Yeah, broader participation.
Exactly. And Bitcoin itself breaking out of that sideways channel it was stuck in. That helps everything.
It was kind of stuck for a bit there, wasn't it?
It was. Now it's pushing up towards that $95,000 resistance level. That sets a positive tone, makes it easier for some alts to catch a bid.
So does this mean, you know what everyone asks, is this the start of alt season, with these altcoins perking up?
Ah, the perennial question. Look, the data shows Bitcoin's dominance is still pretty high, around 64.4%.
Okay, so Bitcoin still takes up most of the market share.
Right. And historically, alt season really means altcoins are significantly outperforming Bitcoin, driving that dominance number down quite a bit.
So these gains are good, encouraging maybe, but not quite that full-blown alt rally yet.
Exactly. It suggests interest is broadening, which is positive, but Bitcoin's still firmly in the driver's seat. We're likely not there yet for classic alt season.
Okay, that makes sense. It's more nuanced. Now, can we get a feel for the overall mood, like the market psychology? Are people feeling, well, greedy again?
We can actually measure that to some extent. The Bitcoin Fear and Greed Index, the report mentions it flipped back into greed. It's sitting at 72.
72. Wow. So a definite shift from maybe fear or caution just a few weeks back.
A very significant shift. It points to growing optimism, maybe even a bit of FOMO, fear of missing out, starting to bubble up.
Yeah, you can see how that might feed on itself, push prices higher.
It certainly can, in the short term at least.
Okay, and that mood aligns with the price action. Now, we mentioned them briefly, but the U.S. spot Bitcoin ETFs,
Yeah.
how big a piece of this puzzle are they?
Oh, they seem to be a major piece. The analysis highlighted huge inflows just this week. One day saw 10,000 Bitcoin bought through the ETFs.
10,000 Bitcoin in one day.
10,000. And the day before that, 4,500. Now compare that
Okay.
to the number of new Bitcoin mined each day. It's only around 450.
Wow. So the ETFs are buying up multiples of the new supply.
Exactly. That puts immense buying pressure on the market. It's basic supply and demand,
Yeah.
driven heavily by this new institutional access.
Those numbers really paint a picture of that demand.
Okay.
Let's talk specific altcoins then. Who are the standouts in this recent rally?
Well, we're seeing movement across different types. Ethereum, for instance, had a solid 13.5% jump, getting close to $1,800 again.
That's a good recovery for ETH.
It is, bouncing back from those April lows around $1,400. But interestingly, even with this surge, its market dominance compared to Bitcoin is still near, well, bear market lows. Kind of paradoxical.
Huh. Okay. What else? Any meme coins joining the party?
Oh, yes. Dogecoin saw a double-digit gain, up 12.7% to Daler and 16. And others like Shiba Inu and Pepe also had strong double-digit pumps. So that appetite for riskier plays is definitely there.
The meme coin factor is always interesting. What about more foundational projects, layer ones?
Yep, seeing strength there too. Cardano, ADA was up 10%, hitting 68.6 cents. Avalanche AVA gas climbed 12%, getting over $22.
Okay, solid moves. Any really big gainers?
SUI definitely stands out. It had an impressive 23% pump, reaching $2.75. That was one of the biggest movers.
23%. Wow. Okay, so it's a real mix then. ETH, Layer 1's meme coins, quite broad.
It is. It's not concentrated in just one area.
Now, shifting focus a bit, the report mentioned some outside influences, specifically comments from former President Trump about China trade and the Fed.
Right. This is where macroeconomics potentially bleeds into crypto sentiment.
How so? What did he say, and why might crypto traders care?
Well, the report suggests he maybe softened his stance slightly on potential trade tariffs, with China not eliminating them, but maybe less aggressive than feared. And he also repeated his calls for the Federal Reserve to lower interest rates.
Okay. Lower rates, maybe less trade tension.
Exactly. And some market watchers interpret those kinds of signals as potentially de-escalation, or maybe bullish, for risk assets generally.
Risk assets meaning things like stocks and maybe crypto too.
That's the thinking. The idea is if you have less geopolitical tension and the possibility of cheaper money through lower rates, investors might feel more comfortable taking on risk.
And crypto often falls into that risk-on category for many investors.
Precisely. So those headlines, like the ones mentioned in that tweet referenced in the analysis, they get noticed. It shows how sensitive markets can be to these broader narratives.
Interesting how it all connects. Okay, so if we try to wrap this up, boil down the key takeaways from this whole $3 trillion market cap surge, what are the main points?
I'd say, number one, the market cap recovery itself, back above $3 trillion, is significant, highest since early March.
Right, driven by that big $500 billion inflow.
Yep. Number two, Bitcoin's leading, but crucially, we're seeing positive movement in a range of altcoins, suggesting broadening strength.
But maybe not full alt season just yet.
Probably not. Third, sentiment has clearly shifted towards greed, as shown by the index.
Okay.
Fourth, those U.S. spot Bitcoin ETFs are a major force, with inflows massively outpacing new supply. Huge institutional demand indicator.
Got it. And lastly,
Don't discount the macro picture. Comments on trade, interest rates, they're being watched and seem to be influencing sentiment, seen by some as potentially positive signals.
so a mix of internal crypto factors and external economic ones.
That sums it up well.
Okay, so here's something for you, the listener, to chew on after this deep dive. Think about this interplay we've discussed. Bitcoin's strong position, but also this flicker of life in the altcoins, plus these potential shifts in the bigger economic picture. How do you see these pieces fitting together? What might it suggest about where the crypto market could be heading in the near term? Something to mull over as you track this evolving landscape.